Hello, welcome to this edition of the SA Crypto Market Analysis. I'm James Preston.
And I'm Graham Tennant.
And this edition is proudly brought to you by AfricaCom. AfricaCom is happening from the 12th to the 14th of November at the Cape Town ICC. And it's completely free to enter as an attendee. So if you want to register as an attendee, go to our website. You'll see a little ad for AfricaCom. Click on that ad and you'll be directed to a page to register yourself. Check what's happening in Africa, the latest tech trends, the latest opportunities in the tech industry on the African continent, what's happening in terms of 5G, in terms of fintech, in terms of blockchain, in terms of artificial intelligence as well. What can we see for the next couple of years ahead? So a really interesting and one of the largest tech conferences on the African continent, AfricaCom, with the child conference Africa Tech, which is all free. Just go to our website sacrypto.coza, click on the little ad on the sidebar, you'll be taken to a free registration page. Now let's get into this week's analysis. Graham, cool. In the car after the Springbok game last week, we were worried. You were 65% bearish, and that played out almost perfectly over the weekend.
Well, not quite yet. We've still been moving pretty much sideways in the consolidation period.
Okay.
So I was waiting over this weekend for that price drop, which still hasn't quite come. So I am in a short leverage position now.
Okay.
So expecting that fall to come. So yeah, we'll just wait and see if that pans out. But for starters, I've taken quite a longer term view here. We're on the weekly chart.
Okay.
And one of the things I just wanted to highlight here is this volume indicator that is available on TradingView, which is really a great indicator. So this shows you your volume by price. So and it's really great at highlighting support and resistance levels. And you can see that the level that we're sitting at right now, which is around just below the 8,000 level, we've had a lot of volume at that price from a historical perspective. So and that's led to, I think, probably the main reason that we've got the support right now. But yeah, I am expecting this to break down further and probably test this next level of support, which is, like we've said before, sitting between 6,000 and 7,000.
Right.
Yeah.
So I mean, over the weekend though, we saw what, about a $200 drop if you zoom in on the chart there.
Let's go getting a bit
so
closer.
you're expecting something bigger than that. So what fell out over the weekend is not the bearish move that you were talking about in our last video. You're actually expecting something bigger.
Definitely. So I mean, look where we've come from. So this was the consolidation period, this contraction of volatility that we had over an extended period of time from June all the way to the end of September. And then we got a proper spill out the bottom of that support zone, and this is the sideways movement that we're looking at here. So this is the daily chart. So yes, I mean that must have been Sunday, and we got a little bit of a drop here. That red candle is about 4%, but I'm expecting that we're going to get a proper drop out of this consolidation period that clearly is highlighted there, down to around about, well, let's call it 6,800. I think is probably the most likely next level of support, and that's going to be almost a 15% drop. So that's what I'm looking for. That's going to be the proper next move. And we've have had a significant period of contraction again, that's storing up this energy. And also, so this is now on the hourly chart, we can see it's almost rolling over. So that rolling over type of pattern is generally bearish. If you're looking for a bullish pattern, you want to see the opposite. So you want to see a rounded bottom. Here we're seeing almost a rounded top in this period, which I think is likely to continue to roll over, and then you'll see an acceleration of selling once we break through this, call it 7,800, 7,700 level. Then I think we really start to accelerate down. And yeah, that's the thesis for my trade, so hopefully that plays out.
All right, so you were 65% bearish on Friday.
Yeah.
Are you a little bit more bearish or still about 65?
Still 65. I mean, we can always be wrong. We can always move to the upside out of this zone, but 65% is good enough for me to put on a trade and stick to that.
So you're sticking there. All right. Now, this week's question comes from Twitter. Carl Diacha of Blockchain Academy shared this picture here. And he said, has someone looked at this? If you adjust the time axis of the current market cycle in red so that it fits the previous cycle in blue, it somewhat correlates. If so, we might only see new Bitcoin highs 7 years from now. He did share another chart of comparing the stock to flow ratio, which unfortunately we just don't have time to get into. Very hard question to answer in 2 minutes. But Graham, you're not sold on this comparison.
Yeah, I'm not saying there's nothing here, but I think you can cherry pick entries and exits over different time periods to find correlations. I think maybe worth investigating this a little bit more. But they do say that history doesn't necessarily repeat itself, but it can rhyme. Okay, so to look for exact correlations, and I know this is not exact correlation either, but it's I think it's far better to look at your broad brushstrokes to find almost that rhyming that they call it, to see things repeating itself in a broad context rather than maybe very specific time horizons. If this does play out, it looks like we're expecting to dip significantly from here to not find that support.
That you're expecting of 6.8 sort of area?
Yeah, look, and obviously we reassess once we do get to those levels.
Sure.
But this would be a multi-level rounding out period of a couple of years and basing out around the 2000 level. If this is to be, I think I'm reading it the way Coral is looking at it, and then moving up from there. So it's interesting to follow. I won't personally be using this as a template for looking at the price moving forward. I do like the other chart that we chatted about a couple weeks or months ago now, which uses the halving period as a peg for the market cycles, and that's even now, based on the previous drop or the recent drop that we've had, seems to be playing out to the T. So I do like this chart better than perhaps the one that Carl sent through, although to be honest, I haven't spent a lot of time looking at these other information he sent through.
Minutes,
So it's something we can keep an eye on. But yeah, I do like this halvening chart.
I mean so that was given to us early this year, and that has played out. We had the expansion and we've pulled back to the mean at the moment.
So we found support there. So I think it's a decent probability that we move sideways quite a bit until the next halving. Maybe some buying in expectation of that halving, and then the real bull market thereafter. I think that's a pretty good template to kind of watch and monitor.
Yeah, I think just from my side, to respond to Carl's tweet, I would tend to agree that it does seem like the cycles are slowing somewhat. Certainly, as you and I discussed looking at this chart, the spike here happened much quicker than the next spike, and even this bull run was slower than that one. So it does align with what Carl's talking about, where the next bull run could take a little bit longer than what we saw in the 2017 bull run. But again, I do agree with you that it's very, very difficult to make a perfect analysis and comparison so closely. I like your thesis on rather broad brushstrokes. That is a serious tongue twister.
It is a
broad brush strokes, as opposed to very direct mirroring. Yes. So Graham, good. I think that's a fair answer, and a typical financial analysis. We'll wait and see.
We'll wait and see. Cool.
Well, that's where we'll have to leave it for this edition. We like to keep it short and sweet. Graham, thanks very much.
Thanks, James.
And again, this episode proudly brought to you by Africa.com. Check them out on sacrypto.co. Click on the little ad, and free entry, Cape Town ICC, 12th to the 14th of November 2019. Carl, thank you for your tweet. We really appreciate it, and I hope we provided some light on the question. From myself, James Preston.
And myself, Graham Tennant.
We'll see you in the next episode. Don't forget, please subscribe and like this video. Share it with your friends. We appreciate the support. Cheers.
Cheers for now.
SA Crypto is not a registered financial advisory, and the information provided in this market analysis is for informational purposes only. Each audience member is responsible for their own financial decisions, and SA Crypto cannot be held responsible for any decisions made by those within its audience. SA Crypto strongly encourages all audience members to consult a professional and registered financial advisor before making any financial decisions.